As of Tuesday, July 21st, 2026, the U.S. stock market is currently closed, with Ondas Inc. trading under ticker ONDS on the NASDAQ, holding its official closing price at $6.87 per share after picking up an intraday move of roughly 5.59%. The common market story floating around Ondas Inc. right now looks picture-perfect on paper. A fast-moving tech firm riding a massive wave of defense spending, expanding its autonomous drone platforms, and posting dramatic top-line revenue growth. Retail traders browsing popular brokerages or pulling up quotes on Robinhood app or Interactive Brokers platform see a stock bouncing off recent lows, backed by unanimous Wall Street buy ratings and aggressive price targets pushing past $20. But when you peel back the headline numbers and examine what is actually driving this movement, the reality on the tape tells a far more complicated story. The surface narrative suggests a simple growth play. Yet the actual mechanics of the stock involve massive share dilution, heavy integration risks following major acquisitions, and an ongoing tug-of-war between institutional volume and retail momentum. Investors scanning popular investment sites or checking their portfolios through a Fidelity brokerage or SoFi Invest account might assume that the recent price jump is purely driven by organic demand for wireless infrastructure and uncrewed aerial systems. The reality is that market participants are frantically pricing in the pending distribution of roughly 45 million additional shares tied to the massive acquisition of ZYZ Technologies. That single corporate action expands the outstanding share count towards 614 million shares, fundamentally shifting the company's valuation metrics almost overnight. While the top line is expanding, reaching over $50 million in recent quarterly filings, the operating expenses and research budgets have surged just as fast, leaving the company with substantial EBITDA burn and creating a structural gap between gross revenue and actual bottom-line profitability. When examining daily price movement and market mechanics, Ondas stock has demonstrated extreme volatility. Over recent weeks, the stock suffered through a brutal 7-week downward stretch before finding a floor near the mid-$6 range. Heavy trading volume, often topping 100 to 200 million shares in high-velocity sessions, underscores that institutional traders and short-term speculators are actively flipping this stock. The beta on this ticker sits well above 2.5, meaning whenever the broader tech or defense sector twitches, Ondas stock reacts with amplified momentum. Analysts across major firms like H.C. Wainwright and Needham maintain price targets ranging from $16 to $25, pointing toward the massive $500 million plus revenue baseline expected across its consolidated defense and autonomous business lines. However, the market pricing reflects a significant risk discount, driven by concerns over how efficiently management can integrate these aggressive acquisitions without continually tapping equity markets for additional capital. To understand why this gap between market perception and structural reality exists, it helps to examine what Ondas Inc. actually does beneath the market hype. Operating through two core business divisions, Ondas Networks and Ondas Autonomous Systems, the organization builds specialized technology for mission-critical industrial and defense applications. Ondas Networks produces the patented FullMax platform, a software-defined radio technology that allows heavy industrial clients like Class 1 railroads, electric utility providers, and oil and gas operators to deploy private, secure, wide-area wireless networks. This is not consumer-grade Wi-Fi or standard cellular infrastructure. It is built specifically to operate under extreme conditions where data loss is unacceptable. On the other side of the business, Ondas Autonomous Systems focuses on fully automated drone infrastructure, site protection, and counter-drone systems like the Iron Drone Raider and Optimus platforms. These systems allow industrial sites, public safety agencies, and defense clients to deploy automated aerial monitoring and perimeter defense without requiring human pilots on site. Historically, Ondas operated as a relatively small, specialized developer of industrial wireless. For years, the core challenge for self-investing traders looking at the company on an individual brokerage platform was scalability. Developing proprietary radio protocols for rail networks requires lengthy testing cycles, regulatory approvals, and slow enterprise sales processes. Realizing that hardware sales alone were slow to compound, leadership pivoted toward high-growth defense and autonomous systems. Through key acquisitions like American Robotics, Robotics, and most recently ZYZ Technologies, the business transformed itself from a niche network supplier into an integrated defense and autonomous technology provider. Past financial reports show revenue scaling from single-digit millions in prior years to tens of millions per quarter in recent periods. Yet this transition came at a steep cost, requiring substantial share issuance, heightened operating expenses, and expanding net losses that continue to overhang the stock. Comment below how many shares of Ondas Inc. you currently hold in your portfolio, or if you prefer trading higher cap tech names like Tesla stock, Apple stock, or Nvidia stock instead. Looking ahead, the future outlook for Ondas Inc. sits squarely on the knife edge of execution versus market dilution. The bullish scenario hinges on the rapid integration of ZYZ Technologies and the scaling of counter-drone and autonomous defense platforms. Global tensions and increased spending on military autonomy create a favorable tailwind, and if Ondas can hit its revenue targets while stabilizing operating expenses, the stock could re-rate closer to Wall Street price targets. The bearish scenario, however, rests on the reality of corporate overhead and share count expansion. If the additional share supply overwhelms institutional demand, or if integration hurdles delay revenue conversion, the stock may remain trapped in volatile trading ranges despite headline top-line growth. Ultimately, Ondas Inc. represents a classic tension between high-flying market expectations and grounded operational reality. On the surface, it offers an appealing story of defense modernization and cutting-edge autonomous hardware. Beneath that surface lies a business managing high cash burn, aggressive corporate dilution, and complex operational integration. For investors navigating self-investing strategies, managing accounts on Fidelity Wealth Management, or tracking stocks through Schwab Intelligent Portfolios or a SoFi robo-advisor, parsing the difference between real earnings power and market hype remains the key to evaluating Ondas stock moving forward.